Hello, everyone. Rick Dwyer with Tactive, along with Rob Isbitz with Sungarden, hedge strategist. Rob, how did the markets behave, and how did your models behave as a result?
Well, let's see. No shirt themed. Actually, I guess a dark gray is probably a dark gray, and haven't shaved in a day and a half. This is probably about the right mood. I try to address the mood. Always for you and the Tactive folks, Rick. Look, I don't think the story's changed, and it's really interesting because, and I'm trying to remember where I heard this, but I guess my response when somebody said, actually, you know what? It came from a couple of investors where I'm helping the advisor, and occasionally I'm on the phone with an end client, et cetera. And I guess the kind of attitude was, well, hey, it's a bear market. I know we're doing pretty well. I mean, look, the core strategy this year is, is beating the 3 to 7 year treasury. Okay. And it's just about even with the 1 to 3 year treasury. So it's not up, but in a year where the only way you're up is if you were willing to be way down, and instead you're way up, like, put it all up, put it all in red or put it all in black, as the case may be, and go, 1,000% short, whatever. Okay. If I ran a short product, I'm sure we'd be doing really, really well. I run a, all weather product in core. So I guess the conversations have kind of gone to, well, why aren't we making more money if you're kind of bearish tilted all year, and and the market keeps going down, down, down. And the fact is, the market isn't going down, down, down. The market went down, down, down until about the 16th of June. And so now we're looking at 4 months and a week of, and I kind of made this fancy move the last time. Okay. I think I said, we can do fine in a trending market up or down. It's this thing, okay, that especially when the market closes here and it opens here, and then the rest of the day, it just kind of goes nowhere. Unless we're trading 24/7, okay, which is not really the style, overnight and futures and all that stuff, then this is a market of, gap ups, gap downs. And it's kind of like in football, when you hand the ball to your running back and, he runs about 50 yards just to get away from people, and he ends up at the line of scrimmage. So he ran 50 yards with his feet. Okay. And, no gain on the play. Right. And that has been the market for over 4 months. So what we have done in that environment is we have tried to take little pockets like a whack-a-mole. Hey, wait a minute. Maybe there's a green shoot. Maybe there's a red shoot. Okay. Can we make money on the downside? Can we make money on the upside? And here we are, S&P, 3,800 or thereabouts. 3,600, 3,800 is basically where we've been. This was certainly a possibility 4 months ago, and has come to pass. And look, who knows how long that will be, but until that breaks, there's only so much you can do. So what have we done in the portfolio? We've tried to market neutralize it as much as possible. And effectively what you have in the core portfolio right now, and I'm actually doing a call with Tactive advisors tomorrow afternoon, for those who can make it. We haven't done something like that in a while. But I will talk about the idea of ETF arbitrage in a portfolio. And what that essentially means is you're playing offense and defense at the same time, but you're trying to keep your overall exposure to the market pretty flat. So if your longs do better than your shorts, good example from this year, the Dow has beaten the NASDAQ. Well, you had Dow and you had short NASDAQ, just on that combination alone, you're adding some value. So that's the general nature of what we're doing. We've got a little bit of cash now. We're close to market neutral, maybe slightly bullish, but do not take that as an endorsement of this market. It'll make a move at some point, and when it does, we'll be all over it. But not if that move takes 2 or 3 days and then it's extinguished.
So because of the way the market's kind of range bound right now, overall, are you still in the bearish camp, or have you modified that to neutral or positive?
So, I do believe that the ultimate outcome, okay, the way I used to say this when I was an advisor for 27 years, and my clients would ask, what do you think? The answer would be, the question is really, what's the next 20% move? What direction is it going to be in? Okay, the next 10% move, your guess is as good as mine. We're threatening to break out from a downtrend, but it's not the big downtrend, it's the baby downtrend that we've had since August. And if we break through that, maybe there can be a little bit of a rally. But if you ask me, what's the next 20% move in the S&P 500? Is it up or down? I would say 90% chance that it's down. And that's why I'm still red on your color bar.
Okay. Well, great. Well, thanks, Rob. Pleasure as always. Advisors, if you have any questions before you get to talk with Rob tomorrow, feel free to reach out to him. Any clients or prospective clients that are watching this video and want more details on how the Sungarden strategies can work for you, reach out to the advisor that sent this video to you, and I'm sure they'll be more than happy to answer any questions that you have. Rob, look forward to talking to you on Friday. Have a great week.
Thanks, you too, Rick.